Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Thursday, May 3rd, 2012 is sponsored by Realtick. All right, let's get right into it today, folks. The markets are taking a little bit of a hit across the board, and this again could have been predicted very, very easily, and I will show you how. First off, Dow is down 75 points, Nasdaq down 37, S&P down 11. So basically, Dow and the S&P are down about 0.5% to 0.75%, and the Nasdaq is taking a bigger hit, down about 1.2% on the day. The reason why the Nasdaq is taking a bigger hit, I mean, you have Apple negative, you have Intel taking a pretty big drop today, down 1.65%, and there's a couple other tech stocks that are taking a hit today. Now, the bottom line is, how do you predict a market was going to reverse over the last couple days? Number one, this is something I showed you guys yesterday. If you look at the pivot top from Monday, actually that's Tuesday, believe it or not, from Tuesday right here, you can clearly see a trend line pierce that extends all the way back. This is what we call a retrace. And a retrace basically tells you that you had a period here where you were chopping up and down with parallel lines. And at one point, you finally broke down. And this was a call to breakdown. It's an obvious breakdown. You can see it. Anyone can see it on the charts. Bottom line is you had a breakdown. The market broke, then bounced around, and then retraced to the breakdown trend line. When you hit that breakdown trend line, there is almost always a sell-off in any chart. I don't care what chart you're looking at. That is the spot right there to short the markets, and that's exactly what we did with a couple different plays out there. All right, but bottom line is that was your pivot top. Then you take it a step further, and this is where it really gets exciting, guys. I'm going to raise this one trend line because I want to focus on the other trend lines. What you see right here next is a chart that goes up, down, and up and down again. What type of pattern is that? That is a head and shoulders pattern. Well, again, if we know head and shoulders patterns, we know they are bearish in nature and usually result in further downside. So again, we know that the neckline is right here connecting the neckline here across, which is this pink line. When that breaks, that means the head and shoulders is in play. Sure enough, it has broken. The head and shoulders are in play. So, I mean, there's just some great things on the charts right now. There's actually more that told you directly that today would be a down day, and I'm going to show you that next. And again, when you compile all these factors, you become an expert trader that will win in trading, profit in trading, 8 out of 10, 9 out of 10 times. Okay? And that's what we do here at InTheMoneyStocks.com, folks. And by the way, you join us, you take the 7-day free trial to the Research Center, which is geared towards swing traders and investors, or the Intra Day Stock Chat 7-day free trial, which is geared towards intraday traders, day traders. All right? Now, going back to this, you had a pivot top right here, which we knew was a dead-on top in the market. As you collapsed, you came all the way down into the following day, which was from basically Tuesday's high into Wednesday's low here, and this is where it starts to get interesting. You started to consolidate sideways to up. Now, to most amateurs, it looks like a float, sideways up on light volume, and it was light volume, and it was a float. But what type of pattern is that forming? How do we read that? And the easy answer is this. When you have a big shot down and you start to make that type of pattern, it's what's called an in spirit of bearish flag pattern. A bear flag, like its name, plays out to the downside. Okay? Sure enough, what happens today? You collapse down. And there it goes. So you can see how just looking at the last few days, you can literally pinpoint the levels with extreme, and I repeat this, extreme accuracy in terms of calling the market's moves on a midterm basis over multiple days, or even on a short-term basis over the course of 24 hours. Imagine if you take these skills and apply them to any chart out there, currency, stock, commodity, ETF, and you start printing money like the pros. We will teach you that here at InTheMoneyStocks.com, bottom line. All right, we're going to teach you how to do this on your own. We're going to give you trades inside the Research Center on the Hot Charts and Alerts, which is basically swing trade alerts. And we will let you guys rock and roll and make money like we make money here. Right. In any case, right now the markets again have broken the neckline of the head and shoulders, which is important to note here. You're now making an in spirit of bearish pattern. It's hard to imagine this market will see too much more selling today. The reason why I say that is because we have the jobs number tomorrow, the non-farm payrolls number. The numbers this morning, we had jobless claims, which were actually a pretty solid number, and then you had the ISM non-manufacturing numbers, which came out at 10 o'clock, and those were poor numbers, and that's really what started the sell-off. You can see we were trading right up here into those numbers, and then you had a collapse, bounce, and collapse. And again, notice how the bounce today took you right into the moving averages, major resistance there, and then it collapsed back down. All right, and again, this is a short-term bearish pattern right here developing as well, which dictates we might have a little bit more downside. I don't think there'll be that much more downside today just because, again, you have the non-farm payrolls tomorrow, unemployment report, which will be the big thing that a lot of traders are just on the sidelines now watching for. A lot of people think it's going to be a poor number. I think it could surprise the market and be an okay number, but we'll obviously just follow the charts tomorrow and see the reaction off of it. All right, taking a look at some stocks in motion today. I think GMCR is probably the biggest one we need to pay attention to. Green Mountain Coffee getting slammed by $24 today, folks. This is a 48 to 49% drop on the stock. And the key to looking at this, folks, is you have to go to your daily chart. I mean, this is a little bit, in my opinion, of an overreaction. I'm going to explain why. You've come down to this level really right down here, and that's kind of the level you're holding right now, this little pivot low. But bottom line is, the market didn't like the fact they missed earnings, but I think it's the future guidance that really scared the market the most, is that they just didn't have a good grasp on future guidance. And when a company can't guide you for the future, you start to get very nervous. And that seems to be, now either way, I think is a little bit of an overreaction. Not that it's necessarily a buy for a swing trade yet, but it is something I will have on my watch list over the next few days and see, ultimately what patterns form on the charts. But down about 50% on a miss on earnings is, we've seen companies drop 10% on those misses, or 20% or 30%. Very rare you'll see a big multi-billion-dollar company drop 50% on earnings. All right. Obviously, there are a ton of shorts in the company, and that's part of it as well, but nonetheless, that's what we're seeing here. So a big drop there. If you look at the chart yesterday, could you have predicted this drop? And the answer is yes. Why? Well, you had the downward move here and then an inside bar consolidation pattern on the daily chart. That's called an in spirit of bearish pattern, just like on the spiders that we had yesterday. See this pattern if we flip over to the SPY? All right, remember if I zoom out, this drop and then the inside bar, that's the same pattern. Markets repeat over and over again. You need to learn the patterns and profit that way. So this same pattern resulted in a fall in the spiders today. If we go to the GMCR daily chart now and we flip over to the daily, same type of pattern. Look at the results. Okay? So again, learn that stuff, guys. Very, very important. Other than that, we're seeing Apple hovering down about $4 on the day. A little bit of a sell-off there. Apple's actually near a continued correction mode, and the reason why I say that is you had that big pop on earnings right here. Since then, we've come back down to the 50. If you close below the 50, I think you could easily fill the gap down here from earnings, which would be down to about 560. So keep an eye on that $560 level on Apple as we could continue to head south. Again, it just makes me chuckle how many upgrades Apple was getting when it was above $600 per share, how people were saying, oh, it's going to $1,000 per share, and all these analysts and Kramer and everyone else pumping out there. And then ultimately, we all know that's a good indicator of a top. And, as we advised our members here at InTheMoneyStocks.com, it was a top, and sure enough, it was. But again, just something to keep in mind going forward. All right, guys, on that note, have a great rest of the day. I'm going to get back to trading and making money. Come join us here at InTheMoneyStocks.com. Profit with the pros. Let's do it up. And we hope to see you as part of the free trial of the Research Center and the Intra Day Stock Chat. Take care.